think we're live.
All right, here we go, boys. Here we go.
I think we're live.
Hey, everybody. Jason
Software.
Phelan at Hard Money Bankers, Ian Horowitz from Equity Warehouse. We're going to introduce you to Jim Shivers in a second. What's today? The 7th, April 7th. As you know, if you've been watching some of our Facebook Lives, we are time-stamping all of them because every day, even though every day seems very similar, every day is very ever-changing, especially right now during these very weird, funky, and unfortunate times. So some of the comments, opinions we've chatted about in the past might not be the same, in the future because things are changing every day. So, yep, glad everybody's here. We're going to hop into with Jim in a second, and then Ian and I we have a few other topics we want to discuss related to the PPP, the Paycheck Protection Program, some updates that we heard on that. Ian has some more updates related to his rental portfolio and some of his tenants. So do your thing, Ian, and we'll hop in.
I'm sharing, and I'm about to jump in. I got dressed up for my boy Chivers today. He always gives me crap. I got a nice Carhartt shirt on. I got my tie on. Omar coming. I'm here. I'm ready. I'm excited because Jim Chivers, a very good friend of mine, we just did a deal this week. I've known him for quite a while now. I met him by getting involved in real estate just by hanging signs for a real estate company. Jim is very well versed in the commercial real estate world. It should be interesting to hear what he's seeing from locally, what we're seeing in the commercial real estate world, from office to industrial to retail. Hey, Jim, you there?
Yes, sir. How we doing, gentlemen?
Good. Hey, Jim, I know you were on the big webcast that we had last week, but for those people that weren't here last week, do you want to just give a quick background of who you are and where you're from and what you guys do?
Where I'm from? Well, originally from Minnesota, but I've been here in Baltimore since 2000. Work for a company called Gold & Company. We're commercial real estate brokers. Our offices are headquartered right in Mount Washington. Do a lot of industrial leasing and sales, office leasing and sales, a little bit of retail. And we kind of specialize inside and outside of the Beltway. And Jason, I've done some work with you and Ian, just settled one last week. It was great working with you and Dan and Brian Parker in that one, and glad we got that one done. It was touch and go for a little bit, but we'll talk a little bit more about who the owner user was and what their vision is here down the road. But thanks for having me, guys, and been chiming in, watching shows here the past week or two, and you guys are doing an excellent job.
Nice.
So, real quick, to get it started, what are you seeing specifically to the marketplace here locally with everything that's going on, and what how are you guys adapting and overcoming the current situation?
Yeah, happy to kind of walk through the different sectors we have here in commercial real estate. And Jason and Ian, I've got questions for you guys too, because I think we're all starting to collect information through this. And as the days go by, what are we looking at? And a question I have, a big question, is the status of retail. And the economy was humming along here, the past 2-3 years, and the vacancy rates were very low in terms of retail. If you're looking at a strip center, you probably had a shopping center or a grocery store as the anchor in the shopping center. But for you, Jason, this question's for you. How are landlords, you're underwriting different shopping centers now, but how do you look at a cap rate? If now that some rents are not guaranteed and you're underwriting a shopping center, how are those cap rates established, or how can you even look at it, a different cap rate now? Because I think the national average for a cap rate was 6.5%. What are you guys looking at now for that? That's something we're still trying to get our heads around ourselves.
Gotcha. I didn't know you can interview someone on their own show, but I'm happy to answer that. And we were going to get into commercial lending here in a second to see kind of what you see. I'll give you my opinion of how we're underwriting projects right now, but it's not going to be the norm that you're probably used to because we're a non-bank lender. We use our own capital where we fund deals, and we're looking for a lower kind of exposure, makes sense deal that works today, works tomorrow, and works down the road. And in general, I'm not really going off cap rates. I'm kind of going off as is values, what we kind of see, what happens if if they lose tenants. Right now, especially on commercial stuff, we're kind of just doing make sense, lower loan to values on make sense deals based on as is value. And I know that might not be the answer that a lot of commercial owners want to hear right now. But at the same time, I also don't believe that some of the commercial owners are also trying to get the most aggressive, most aggressive program that's out there right now. Like in my mind, if someone needs quick, easy funding, because that's what we do in general for hard money lending. We do quick, easy funding for someone that just needs a low doc or no doc, easy scenario for them to acquire the property or to take a bridge loan out on a property that they already own. I'm not looking to do, and they wouldn't want to come to us for longer term debt anyway. So, obviously we're higher interest rate and it's just an easy process to get in the door. So for instance, someone might want to acquire a building in Baltimore for $500,000. They might come to us. We might give them $250,000 or $300,000 in this environment, just based on their purchase price. It's bridge capital. It's short-term capital. It gives them the ability to get in the door right now, knowing that as some of the markets open back up, and maybe some of the markets are opened up, I'm not 100% sure, but it gives them a quick, easy, few business day turnaround loan to get them into a deal that they might not have been able to get into because maybe they're getting a steal on a deal right now if they can get in and out of it very quickly, or because it's hard to get their hands on capital right now. We'll put up the capital for it, knowing that honestly, it's going to be a longer term. They're going to need some sort of longer term financing in the future.
Mm-hmm. And it's no surprise that retail is actually absolutely getting smacked right now. And you look at your shopping centers and your strip centers, and most of the time the grocery store is your anchor tenant, but they were given a sweetheart deal anyway to get in, sign a 20, 30-year lease, decent rental rate, but you make most of your money with the smaller guys. Those are your gyms, nail salons, barbershop, the companies that are kind of anti-Amazon, and that's who you filled up most of your shopping centers with. And those guys are not essential right now. So, are you collecting rents in those? That's still.
What
we were going to ask you the same question. Like what do you see? I mean, are buyers still actively trying to buy commercial buildings, or sellers trying to unload stuff, and are tenants, who are operating, are they moving, or are they kind of just staying still and kind of playing the waiting game?
And there was a lot of deals done within the last couple of years. So there's a whole boatload of 1031 buyers out there right now. And, they're kind of under time crunch now because you need to go identify that certain type of property and under a period of time. So, how are they looking at the deals now, especially when rents aren't guaranteed? That's something we're trying to get our heads around. I think it's still a little too early to tell who's not paying. There was something, and I know you're a big CNBC guy, Jason, but there was a company called Related Companies out of New York. I think 50 billion in equity, and out of New York City. 90% of their industrial and office tenants paid. I think 80% of their multifamily tenants paid. 24% of the retail tenants paid.
You saw that yesterday. You saw that yesterday morning at about 10:30, or about 9:30. That's who I quoted yesterday because they own Hudson Yards.
You inspired me to watch more CNBC, so I've been all over it. And Ian, we had a lunch one time at Towson Hot Bagel with an investor. It's at one time we were looking at to buy that bar. He was just informed yesterday, and I'm surprised he took this call and talked to me, but he's got a 600,000 square foot tenant with Joseph A. Banks as a main distribution center, and they're not paying rent for 2 months. So we're still a little early to tell who's not paying and how long this is going to be. And as you guys know, there are lenders out there, and are the lenders going to play nicely, or are they going to start defaulting on these mortgages?
Well, a few things, and I'll quote the guy because I've used this 3 times already because I love this quote, and I'll quote that guy who you referenced in New York, and the way that he said it, and I might even have this quote right here, even though I know it off the top of my head. It's the borrowers or the tenant's obligation to pay their mortgage or their rent if they can, and it's the lenders or the landlord's obligation to work with those who can't.
And I think this is where the difference between the single family world and the multifamily or commercial world come into effect, right? Like, okay, I think people feel bad for those that are involved in the single family world that are negatively affected. But for Joseph A. Bank, who I believe is most likely a publicly traded company, to come to them, yes, retail shut down, you got to assume their cash reserves are somewhere in the $500 million range for the size company that they are, or whatever it may be. For them to come in and say it, the question is where is that line, right? And Jim, that's what I'm looking to you for, and maybe you can show to our viewers a little bit better is those type of tenants. I mean, they're big boys, right? Like we just went through that on that sale where they came back and trying to get us to self-negotiate against ourselves. How much is a negotiating tactic that they're employing to see what they can get away with to hold cash on hand versus the companies that are actually going to step up and obligate and pay, right?
Yeah. And actually, I did have this conversation yesterday with that particular investor, and he's got 27 commercial tenants throughout the area. Most of his tenants are paying, but it's just that big boy with Joseph A. Banks that's 600,000 square feet. You're probably $4 or $5 a square foot. That's a big number. And we saw that, with the company Coparts, who it's now public information, who ended up buying your building. Last minute on the 11th hour, they came up to us and wanted a price reduction. And you guys did a nice job. And we knew it was kind of a gimmick, coming in there. And we said, we're not going to, decrease our price, whatever, 100,000, whatever they were asking to do so. So I've yet to see a real impact on pricing. I think it's still early to tell on that. And one thing, moving on to the next sector, is office. What's the big question mark in that? And Jason, I know you're watching your shows. You think that office space is the next thing to crumble? I don't know. I'm getting a lot of mixed reactions on that, just because it looks like, Ian, you're still at your office. My work productivity is a whole hell of a lot more of going to an office and at home. And if you've got a bunch of 20 to 30-year-old that you're hiring out of college, you want to go to an office, not sit in their 1-bedroom apartment and work from out of home.
Well, and again, and I'm not disagreeing with that, and I agree. I much rather work in the office. I'm more productive there, and I think a lot of people in general. I think a few things. Number one, I think a lot of businesses not only do have to adapt, and they have adapted over the last 30 days, that they have to work remotely, but I think also they're opening their eyes and saying, wait a second, we already have a lot of these things in place right now. We've already put the resources in place. We could potentially lower our overhead right now by not having such high-end office space anymore, because people can work remotely, or we can do workarounds. Like all of a sudden, when it's an emergency and it has to happen, let's be honest, everyone figures out a way for it to happen. I think related to offices in general, I don't know long-term, but I think short-term, listen, in the very, very short term, I think a lot of people by working with this PPP, Paycheck Protection Program, it's going to buy themselves time. So if there's businesses that aren't operating right now, or if whatever the case is, or if their revenue is lower, this will buy them time at least, right, for the next 2 months. But I think in general, who knows if it's the type of business that's going to stay in business, if they're going to continue to need their office, do they want to lower costs? There's a lot of talk related to how long this is going to last, how long it'll take to revamp and get the economy up and running. Is this going to happen again in the fall? Is this going to continue to happen? So
I think Jim has a very valid point. Jim, what were you saying about larger office type people like your Legg Masons of the world? I think that's where you said you'll see a lot more effect versus the equity warehouses and the hard money bankers and gold commercials. What was your thought? What was your thought on that?
You guys saw this last 3 to 5 years that the space planners, the architects, your big corporate users, they really started to push for a small, tight-knit office spaces, kind of community gatherings, ping pong tables and bars. And what I'm trying to get my head around is just a knee-jerk reaction is, does the square footage per person go up now because of your new health standards? That's still yet to be seen, and that's something we're going to keep an eye on here in the next month to a year, and how this affects the office space. And I just talked about earlier how Legg Mason, that's a big vacancy here in Baltimore. 30 to 50,000 square feet. We just lost William Scotsman down at Fells Point. They're a big chunk of office space. So yes, there will be vacancies, but they will be leased soon. And it's exciting to see who will be those next big time corporate tenants coming here to Baltimore, and how are they going to change with our new health standards. That's yet to be seen, and big question mark.
And a big thing with this, and you might know better than we would, but I mean, I run everything. I operate in the small business, the real small business world, and all of our clients that we do loans for, even our private capital investors, everyone that all of our friends and colleagues that we work with. I mean, we're all small business owners. A lot of that stuff doesn't make a huge dent into some of these things. For instance, like you said, some of these huge, Merrill Lynch or whatever, if they take their headquarters elsewhere or they decided to downgrade, I mean, that's huge. There's a huge office complex, tons and tons of resources with that. So sometimes it's hard for me to fathom some of that stuff because it's just not the world that I live in. I mean, we make a dent in about $30 to $40 million in the private capital sector. That's nothing, right? That's a lot for us. Ian's 100 rental properties, that's a lot for one person, a small team operation. But again, there's such a higher macro level that really affects, so much of it. And I understand it all happens, on the small side because there's just, a lot of people like us, like you, like Ian. But who knows? I mean, it's interesting, and again, a big part of this is also, geographically driven. We're all somewhat fortunate that even though we're, the Baltimore metro isn't necessarily the DC metro, it overlaps and it's similar in general. I've seen a lot of Facebook posts, not that I really like looking at what most people put on there, but I've seen a lot of people, going back and forth, and then there's a lot of stability and there's a lot of good, government jobs and things like that locally that a lot of other parts of the country just don't have. And people are biased because they don't, you don't realize that. So, when industries go out and depending on where you are in part of your country, for instance, like, government, most people around here are still getting paid, even if they're not going to work. Besides some, some industries, obviously not, but a big part of the population around here is. So it's hard to think, East Coast, West Coast, North and South, when a lot of the stuff that I concentrate in, most of you guys concentrate in because we are local, is insulated by what's going on.
Mm-hmm.
Yeah, no, that makes a lot of sense. And Jim, that's a question I got for you is that I think leading into this, like you're a lot of, people were dying to Amazon, right? So where does that go? But, your CVS, your Walgreens, those types of investments, the ones that had those super low cap rates because they were considered secure. Do you think those cap rates are going to compress even lower because they're going to be even more secure in time like these? Or are they going to increase because they're less valuable, because they don't have the interior part of the store operating?
Yeah, and I guess those stores are considered essential businesses, so they're open right now. So if you have a pad site, long-term lease with CVS, and they're triple net type deal, they're paying all your real estate taxes, insurance, common area maintenance. That looks like a very sweet investment right now. You're probably taking your attention away from the shopping centers, maybe not paying as much attention as you were to your fully leased office building as you were, but that also leaves you kind of leaving all your eggs in a basket with one tenant again, with the low cap rate. In the unlikely event that something like that does happen where they're forced to shut down, you're stuck with a pad site or a vacant building, with CVS.
Yeah, there was one recently trading locally, I think at like a 7% cap rate, and after the rate increases, it was almost 10 by the time you exit, which is crazy for those types of facilities. So it'd be interesting to see what happens to them over the next few months. How much do you follow the commercial mortgage world and Carl Icahn's viewpoint on shorting commercial mortgages? Is that an overall play on the overall industry, or
it seems like he's been all over the board lately, and just kind of seeing what he said 2 months ago, and now he's had some positive comment a couple days ago. I try not to pay much attention to him because it was depressing every time I open up one of his articles. But that's a little bit more of a world that Jason's in, is the mortgage business, commercial mortgages. So
yeah, no, I just didn't know how it would reflect back into your industry.
Yeah, who knows? And I mean, who knows also right now what's even getting manipulated, similar to the stock market, if things are going up and down and different opinions, and consumer confidence is the weirdest thing, because just based on like me personally talking to a lot of one-off individuals on a regular basis, I feel like I can feel people's confidence just based on like, hey, the market went down 10%, the market went up 10%, the market went down 10%. And it's like, you can't think like that. It doesn't work. And, you know, at one point, like, I like thinking on stuff on a macro level. It's hard for me to think on a huge macro level, but then at the same time, I also try to think of what our individual niche is. And listen, as all the levels that, you know, we're in, markets could crash, markets could spike, markets could stay stable, and we could all still, or anybody, not just us, but anyone could still be successful if, you know, they adapt to that correct thing. Now, obviously, you know, in huge business, it's a little bit different, but for what our individual roles are inside the local commercial real estate community, there's going to be opportunities no matter what. I look at it like this, and listen, if markets drop 40, let's say residential properties or commercial properties drop 40% overnight, let's just say that happens, that would suck and it would be a hardship. But at the same time, we'd adapt to it and figure out a way to do it. You know, our loans would be that much lesser. Your rental properties would be that much more. You know, potentially there'd be an influx of commercial buyers that want to all of a sudden just jump into the market because they feel like there could be a lot of opportunity. You know, maybe there's whatever, less leases, more sales, you know, because all of a sudden it doesn't make sense to lease a property. It might make more sense just to buy a property. So who knows? Like I kind of, you know, just because slightly an underwriter by nature with some of this stuff with lending over the last 13, 14 years, I feel like I just try to get as much data as I can and make the best decision that I can. And if it's wrong decision, the next one will be the right decision.
There's a lot of money out there right now, and it's tough if you're an owner user and you're getting ready to go buy a building. And Ian, that's why I was bothering you last night at 9:30 last night on the phone. You yelled at me for calling you so late, but I'm trying to find banks out there. But all the banks are absolutely swamped with the SBA stuff. And if you've got a relationship with, you know, just for example, Wells Fargo or some other bank, they're absolutely tied up in all the SBA stuff. So you're not going to get your attention from them, and the process is going to be even longer right now.
Yeah, and how do you feel as though the owner user market's looking? That's exactly what I was going to ask you about, because that's your bread and butter, right? Is small commercial type stuff that's owner user. Is there still people out there actively looking? Are you having to do anything different? Are you having to do virtual tours? Granted, it's commercial space, but most owner users, I'm assuming, just, you know, they're looking for something for the business. They need it. Is that market still pretty active right now, or are you seeing a slump?
No, we've been very busy, especially in the industrial world, and our investors and buyers are still very bullish on the industrial. Owner user deals are still moving forward. As I mentioned earlier, there's still a lot of 1031 money out there. And if you do a drive down, actually, and I just read this morning that the Baltimore port shut down for a couple of days. Not really sure what was going on there, but, you know, Baltimore's success in terms of industrial has come from most of the port type businesses. And yeah, and Amports, they're an auto company. They're large in the Fairfield industrial market, even over in Dundalk, and they're very busy at the port because they had barges coming in anyway with new vehicles. And, you know, e-commerce, Jason, you probably saw this on CNBC the other day, but 15% of that is all retail sales, and they were saying 2030 to 2035 that number is going to double. So with medical supplies, pharmaceutical supplies, you know, and starting to bring back manufacturing back to the United States, that's all going to increase the demand and need for warehouse space. And with e-commerce improving, that helps your trucking industry. So all the little accessory businesses that help, you know, tire companies, you know, your repair stores, that all kind of spirals down to that. So still a high demand for industrial, especially in this Baltimore market right now.
Yeah,
I can see that.
Absolutely. And I think that's what makes the world goes round, right? Like, and I think that's why a lot of people are scared. They're like, oh, Amazon's taking people out, but Amazon still needs the product, right? Like somewhere, shape, or form, someone needs to house it. So whether it's a retail front with a warehouse on the back side of it, or a grocery store that supplies Amazon or whoever it may be as an online retailer, there's still a need for it. What I was going to ask you is, what are you seeing? And I know that you don't deal much in it, but is overseas money still prevalent right now, or, you know, are we still attracting those type of investors?
We did about a year ago. I think they had a strong program of trying to get some overseas money here in Baltimore, and we were running around with a few of those prospects to try to get some of those deals done. But I would say it spiraled off a little bit within the last year. You know, your government contractors, and there's still massive support for infrastructure improvements. So that still kind of increase your demand for industrial land, lay down yard, maintenance equipment, and storage close to all your main interstates. So between Baltimore and DC, you see a lot of government contractors or, your infrastructure type companies.
Yeah.
So as of like this few weeks, or even what your thoughts are going to be over the next few weeks, do you think, like, are people calling you right now that want to list properties?
Yes, actually they are. And we've picked up 3 new listings within the last couple days, all industrial buildings. There was a small retail building in Dundalk that was like a convenience store that had to shut down. But yes, we still are getting listings, and still getting calls from owner users. Um,
And I'm
so yes.
and I'm guessing they're probably not because like they were planning to sell anyways for one reason or the other, or were they impacted by this epidemic and now they're desperate and like need to sell? Like my guess is, this was the game plan. Now it's ready. It's time to go. Not that business is totally usual, but like business as usual. Like, this was our game plan.
It's still early to tell about what kind of damage this has done, because there is some government relief out there that help pay your rent, or that's still in the works. Even though I saw Bank of America yesterday was catching a lot of hell, and I think the SBA system may even crash yesterday, which threw a couple curveballs out there.
Yep.
But the new listings that we were getting kind of have been in the works for the past month or two. So we haven't seen anyone that has to sell, that's desperate to sell yet.
Yeah, and I don't think that you're going. I don't think that you're going to in the near future. I mean, I'm guessing what's going to end up happening is most of these people are going to weather the storm. They're going to take their PPP. They're going to take whatever grants. They're going to take whatever they can to weather this storm. And again, the strong are always going to survive. The weaker, unfortunately, could potentially fold, and the ones in the middle will, they work hard right now. They'll end up on top. But at the same time, I feel like there's enough out there, and I'm hoping that most commercial property owners, even if they lose tenants and they have to do workouts, like they have enough to at least weather the storm for a few months, hopefully. And again, it might not be business as usual, but hopefully it'll give at least a lot of people time to reassess what's going on, what they want to do, even the economy in general, of reassessing like what's going to happen. And I know a lot of people are saying that, we're in for a wild ride over the next few years. That doesn't necessarily mean we're going to be in for a wild ride over the next few months. I think we're kind of like up and down, funky, unknown, like not really sure what's going to happen. And then I guess the real test is going to be everyone's going to have to just be smart and kind of figure out what's going to happen between, now and I don't know, the next 3 years to see what really long-term effects are, because you can just pump money at it short-term, at least in, the asset classes that we're in. You can pump some government money towards it to at least get stuff stabilized to weather the storm. And then I guess the real challenge is going to be like, what are the long-term effects? And, does the economy really have a much bigger issue than you can tell on the surface?
No, and this is going to change the way we live. Are we going to want to go to that cramped restaurant that we like to go before, where you're in the smaller space and 30, 40 people there? There are going to be some holes in the market. I think the National Institute of Restaurants came out and said that it's going to force 17% of all restaurants out there to close. So those are going to be some big holes that are going to get filled in this market. And Ian, I know we sat down 3-4 months ago, and I'm just happy you guys didn't end up buying that single tenant bar that we looked at.
There would have been a lot of curse words being exchanged. But again, that came to us underwriting it and saying, it was too compressed. Had it been on the beginning of the upswing, we probably would have taken the risk and said, okay, there's rate adders, but it was too tight. It didn't make financial sense. It was a long-term play. It wasn't meant for us. But yeah, that would have been real interesting, and it's probably a real crazy time right now for a lot of restaurant owners, which I know is a near and dear space to you because that's what you used to do back in the day.
Yeah.
So yeah, man, there's a lot of areas overall, your Federal Hills, your Hamdens, your Fells Points. What happens? You got the whatchamacallit, Atlas Restaurant Group. They got a big hold in Harbor East. Are people coming out to do the restaurant scene anymore?
And,
So it'll be interesting.
and people's paranoia level with this summer and going into next year, do you want to go out and go eat at a restaurant that's packed? It's going to be tough to tell.
Hey man, liquid lunch cures everything. No need to eat. Get the alcohol in the system, and we'll be good to go. Hey Jim, you got anything else that you want to leave us with, or tell people how they can get a hold of you
Yeah.
if they have any questions for you?
Yeah, we're again, locally owned boutique commercial real estate firm. Check out our website, www.goldcommercial.net. You can figure out how to contact us from there. We've got a lot of listings. I want to say we've got 40 commercial buildings here in the Baltimore metro area.
Only one that matters.
Yeah, that you've got a piece we're trying to sell. 3530 South Hanover Street, a nice little 12,000 square foot flex building, beautiful exposure.
Get it, girl. Get it, girl. Sell it, baby.
I'm all over it. But no, I really love what you guys are doing. I catch your show every other day or every day, and you guys got some people in there that are sharing a lot of good information out there. So thank you guys, and keep at it.
Cool. We'll keep doing it. We appreciate you sharing the insight. I know most guests that we talk to are more in the investment residential space than the commercial space. So I'm glad you could give us some insight on that. And again, the crazy part about this world changing on a regular basis, on a day-by-day basis, is things are changing. So if something else comes up in the commercial front locally, feel free to reach out, or we might reach out back to you and get you hopped on again and do it again.
Yeah, and there's some people asking in the comments, Jim, for your contact information if you want to jump on there. Jim at goldcommercial.net. But if you want to respond, there's definitely people looking for you. Thanks, man.
Thank you, gentlemen.
Bye, man. Thanks. Appreciate it. Cool. Well, a lot of good info from good old Jimmy boy. It's a topic I like talking about. I mean, I think Jim might think I'm a little bit more involved in the commercial space than we are. And obviously we do quite a bit of commercial loans, but they're more bridge loans, not necessarily, the types of loans that I think Jim's trying to place with his clients. If someone needs a real quick bridge loan just to acquire a really good deal or to take out cash, we've done a lot of those types of quick deals. But, at a 13% interest rate, most of these investors don't want to carry it too long, so it works again for short term.
Yeah, well, and the other thing is people need to realize what's going on in the commercial world ultimately reflects to what's going on in the single family world. If people don't have jobs, and you can tell by the commercial world, if properties aren't transacting, there's a big default rate that ultimately you see, you start to see that overflow because, people aren't working. Therefore, your single family markets start to get affected, and it all, begins to, I don't want to say collapse, but it's all related, right? And you just need to understand that. And it goes back to the conversation we were having with Mike Schock yesterday. There's a lot of alternative asset classes that the commercial brokers represent that could be valuable opportunities for people that, say, okay, single family's dead, or I want to diversify my risk against single family. I want to diversify inside of real estate. There's opportunities, whether it's, RV park, self-storage, industrial, retail. I mean, retail, I know we were kind of talking down about it, but recently there's been a lot of people coming in and revitalizing retail shopping centers to repurpose the uses, whether it's, infill lots, people converting them into storage facilities, or people converting them, as makeshift storefronts with a huge warehouse out the back of them to utilize them. So there has been a big upswing in that.
And, supply and demand don't lie. You'll know very, very quickly exactly what's going to happen with a lot of this stuff in general. And you're right. I don't necessarily think that, office is going to go anywhere, retail is going to go anywhere. A lot of these places are going to go anywhere. I mean, it might get affected by how much someone's willing to pay for it. Let's be honest, in our type of business and in your type of business, we don't spend a lot of money on rent in general. We're not a business that, it's not like a law firm, like a high-end law firm where you need to have a great location and, a pristine location or a nice restaurant. where it's location, location, location. So some businesses are reliant on location, and that's their biggest overhead expense, is to get that primo location. On our end, it's, hey, I'd rather, save the money and put it towards something else because, I don't have a storefront. I don't need a storefront. And, we spend probably twice as much as we would even need to spend, just because we want to have kind of a big open area where we can kind of incubate and play and be creative. And, we do it because, it's in the budget. So, but some business models in general, they need high visibility. They need, they need certain things. So, who knows? And again, it's not like any of these places will continue or like all of a sudden collapse. Maybe they'll go down, maybe go up, who knows? But the reason why is it's just, residential and commercial is similar to this. Based on supply and demand, you got to think is, are you going to rent a house? Are you going to rent a building? Or are you going to buy a house? Or are you going to buy a building? And it's that simple. So it's not like all of a sudden, the commercial markets are just going to say, oh, there's a building that was $1 million. Now it's only $100,000. It's not going to probably happen like that. And the reason why is because all of a sudden that if that price point is, let's say $1 million, I can either buy a building for $1 million or I can rent the exact same building for $4,000 a month. Chances are I'm going to probably rent that space for $4,000 a month. There's more value to it. Now, that being said, if that building goes from $1 million to, let's say, 900,000 or 800,000, then it's like, okay, now, it might make sense for me to buy that building based on where debt is, and a lot of other advantages. So that's the reason why, just like rental properties, they're not going to all of a sudden just collapse. They're gonna, if renting's here, the price of buying's here, they might even out a little bit until it makes sense. But
Right.
They're not going to just like completely just both fall together.
Right, but you also have a very interesting factor inside the commercial world when you look at businesses, is that there are plenty of businesses that don't like to purchase the property because they plan on being in business for X number of years, that when they buy them, then they're responsible for maintenance and everything else, versus taking the line item for tax purposes of wanting the rent on their books, and they never buy properties. There's a lot of big corporations that their business model is literally just to rent. So there is that extra factor and extra, I won't say layer of protection, but that there's certain businesses out there that take advantage of that for themselves. So, and
there's also businesses out there that all they want to do, it's a real estate play, the McDonald's model, where all they want to do is buy, and they don't, and obviously they want the underlying business to be as profitable as possible, but that's, they're placing the real estate. And I actually think Lifetime Fitness, I heard, was similar to that too. Don't quote me on that, but I think that was similar.
Interesting. Yeah, no, it's all factors that everybody should compute when looking at commercial world.
And again, the rates have a lot to do with this right now. A lot to do with it. All of a sudden those rates start skyrocketing or going up. That's what really makes things challenging, or puts a monkey wrench in a lot of this when that occurs.
Yeah. You have any updates? Any updates to what's going on in the world with PPP or anything? I see one of my buddies that has a manufacturing shop just joined. We've been exchanging a lot of information on PPP.
Has anyone got the money in hand yet? I mean, I still think they're saying later this week. Originally, they thought same day to the next day. Now they're saying later this week.
No, I haven't heard of anyone. Our bank hasn't reached out to us. I did get I don't know if I shared this, that we got an email saying we were ineligible for it. And then after a whole bunch of back and forth, they decided that we were eligible for it, because again, for anyone that's looking to apply, it's if you have employees on staff, you're eligible to apply, as long as you have somebody that's getting a W-2. That is the only limiting factor to it.
And then the next round, from what we've heard, was supposed to be this Friday coming up. If you're just self-employed with no employees, 1099, sole proprietor. I know a lot of real estate investors are like that. Maybe a real estate agent who doesn't have any employees, things like that.
Actually, my buddy Greg Pilati, who owns a high-end manufacturing furniture company, he just said that they got approved for the PPP funds. It's saying 3 to 4 weeks for getting the funds, and he said he just found out from his banker.
Jeez.
Yeah, so
that's not doing the good that originally the game plan was, because the game plan was obviously companies need emergency money, but other companies just need the funds before the next round of payroll comes or the next round of rent or mortgage comes, right? Next round of utilities come so they can weather the storm for a few months. And, that's going to make it more difficult for some companies.
Yeah. Well, maybe Greg can jump on here once he finds out a little more information and keep us posted to what's going on. Have you seen anything else in the marketplace? Anything changed for you?
No, not really. I'm looking at Greg's post right now as well. Shocking.
Yeah.
3 to 4 weeks? Question mark. I know. That's if you haven't applied yet, you need to apply ASAP because some of the banks are already done lending them out. Wells Fargo already stopped. Wow. Wells Fargo already stopped. I didn't hear that. We'll have to jump on. Maybe we'll get Jason back on this week.
Yeah, I'll talk to him and see if he can come on Friday, especially since Friday's the big sole proprietor today. I do know that, unemployment and those things, people are actively already getting paid for those things.
Really?
At least up in Pennsylvania, from what I can tell, from some people that I know up there. I did have an interesting phone conversation yesterday with a buddy of mine out of Pittsburgh, who has a bunch of self-storage, does a lot of flips, has a bunch of rentals. I was asking him what he's seeing. He's telling his guys that he's slowing down on flips. He's still confident in the market, although he does have some reservations. He's not going to be actively buying anything here in the short term unless it's a stellar deal. And I think that just reiterates our message that it's okay to be cautious with your money right now, right? The money's made in the buy. And it was good to hear somebody out of network that's seeing similar things. That's saying, okay, I'm pulling the reins in a little bit. I'm going to take my time on what I'm doing, and I'm only going to buy exactly what I want to buy. I'm not buying just to buy to keep the guys busy, And then other than that, the other things we've been seeing is rents have been coming in. Things have been looking up. It's very easy to try to stay positive here, but you always just got to mitigate your downside risk during these times and, be able to navigate what's going on. So,
yeah, stay optimistic, stay proactive. We've said this every show, but, there's always a time to buy at the right numbers. If the market's going up, if the market's going down, if the market's staying stable, at the right numbers, there's still opportunity. So I, look out for them. You don't have to be sidelined. I think being sidelined and out of the game for everybody, buyers, sellers, lenders, I don't think that's the right thing. This is the time to be proactive and active and do whatever you can to be in front of people right now. And you don't have to do a deal just because you're given an opportunity. You should still be actively looking for stuff and actively staying in front of your clients. And, this is the time. And if there's no opportunities, then there's no opportunities, but there are opportunities. We all know there's opportunities. They might be the similar opportunities that you've looked at over the last few years that obviously you don't want to do that same deal again now, but as soon as you get out of the game, if you get out of the game, there's no opportunities. It's that simple. If you stay in the game, there's lots of opportunities, and cherry pick the best one, or the best 2, or the best 10, or whatever you want to do. But I think this is the time you got to put your head up and see what happens. And as you're looking at deals, a deal today might look good, and tomorrow you might look at yourself and say, okay, well, this deal's better. I'm going to do this one instead. But I would say, I think both of us and everyone we've talked to would suggest is stay active, stay in the game, be optimistic, but cautious, and jump in when you see a deal that could potentially work. And, maybe fix and flips are harder right now. I would say if you have a fix and flip, you do want to buy it at a much lower price than maybe a rental property where, your metrics is different because your metrics is just different. It's not doesn't matter as much as built-in equity as it does compared to cash flow and things like that. Because if you can get rental debt right now, it's cheaper, right? So, if you can still get capital for your rental properties right now, and it's out there, it's out there from us on the front end, and it's out there from other lenders kind of on the back end. It might be a little bit more expensive than, you were getting a month ago, but it is still out there. And, if you have, you might need to put more capital down as well. You might have to put more of your own skin in the game, but keep in mind, do the math, but it might make more sense to buy a property for $100,000 today at a 5% interest rate, let's say, than $90,000 tomorrow at a higher interest rate, right? Do the math to see what works. So
Yeah, definitely all valid points, and again, just be definitive what you want to do with your money, and be cautious. I see Greg's asking, what do you guys think about the office space? Earlier in the video, Jim went in depth on it. This will re-record or replay once I think we get off of here. But, I think we're all in agreement that the small office type people are going to exist. Your type of, Greg, your type of company and our type of company that's small, less than, I'd say 25 people. There's always going to be a need for that type of office space, and the slack's not going to be there as much as potentially in the much larger office space. And I already think there was a little bit of slump. People were going online anyway, so it'll be interesting. It'll be interesting to see where the market goes and how it looks in the future, and do a lot of things in place now, stay in place. Or people are going to revert. We are social beings. I like seeing and talking to people. This is fun and it's good, and I'm glad we can provide content every day. But in the end, I would much rather go grab a bite to eat and a few drinks and talk it out with some people.
Yeah, and who knows what happens. See, the thing is I don't think anything's going to be very affected in the short term. I think a lot of things are going to be affected in the long term. And it's just like the stock market. You're never going to time it right. The first time you think the first time you think you got it figured out, you're going to get kicked in the back of the head. And that's just what it is. I don't think this stuff's going to get affected as much very quickly, because keep in mind, number one, a lot of big buildings that have office buildings in general are typically, corporate owned or something related to that. They don't want to undercut themselves by just automatically lowering rent to get, a higher occupancy. That's just not the game that they're in, because if they lower the rent, then all of a sudden, everything's going to kind of fall in place with that and get lowered and lowered and lowered, lowered and lowered. I don't think that's the game they want to play at. They want to play in. Now, over time, do I think that happens? Probably, but in the short term, it doesn't. I don't think it makes sense to break your lease if you have the ability to, because you think if you're on the open market, you can get a cheaper rental space next door around the corner right now. I don't think that's going to happen. I don't think that's going to happen with, selling a property either, I think all of this stuff, I think that's with the same as commercial. And I think that's the same as the residential. I do not think that soon as a bunch of residential houses pop up on the market, or any properties pop up on the market come June 1st, let's just say, I don't think they're going to be at a huge discount. I think if anything, they might even be the opposite. That being said, I do think longer term, there will be a lot more opportunities, and they'll just be, you got to be open-minded for that. And the problem with it happening like that and not happening overnight, because stuff doesn't, typically things that happen quickly overnight are typically things that aren't in our favor, not the opposite. So I'm thinking what happens is, if it does happen long-term, the problem with long-term is it's just like a stock market long-term, it's going down, going down, going down. Going down, going down, going down. But the problem is, when do you buy? Do you buy here? Do you buy here? Do you buy here? You look like a schmuck if you buy here, but then, because then it keeps going down, but then so many people want to wait till the bottom, but then who knows when the bottom's going to happen. And then by the time you realize it, you're back up to here. So, so who knows? Listen, it all goes back to, there's always a good opportunity out there at any given time at the right number. Do the math. If you think it's a good opportunity and it works with you as a lender or a buyer or a rental property owner, or you're leasing a property for your business, if the numbers work and you're comfortable with it, and you like those numbers today, you like those numbers tomorrow, you like those numbers down the road years from now, do it. And who cares if it goes down or goes up? I mean, to me, it's the same thing as looking at your, 401ks that are tied to stocks, bonds, and other stuff right now. It'll drive yourself absolutely crazy if you log into those accounts every day and see the zigzags and the W's and everything else. It'll drive yourself crazy. So, have confidence that you made the right decision and stick to it.
Yeah, I think Tony Robbins does a really good job covering that in Money Mastery, or whatever the heck that big book that he has.
Yep.
He's done a lot of interviews where he says, the worst day not to put money into the market is yesterday or today, whatever the sayings go. And it's the same thing with real estate. If you can find the right deal that works for you, and you're taking action and you're doing the right thing, it's hard to get hurt. Somebody reached out to us this morning, gave us a compliment on the show, and he was saying, I just bought my rental property, my first 1-2 months ago. I'm sweating a little bit of bullets, but it gives me time to get in order, get my affairs in order, and get ready to hit the other side of this.
I agree.
So,
I agree. I mean, listen, deals, stuff's not going to fall. You're going to have to work hard with stuff. And listen, I think a lot of us like to work hard, and a lot of us like that the barrier to entry might not be as easy as it was months ago, and like that you need more resources and partners and experience. And again, this isn't like a dig on anyone individual, on anybody individually, but the fact is, and I remember Jay Scott talks about this all the time, and I like his quote on this is real estate in general has a very small barrier to entry compared to a lot of other business models. And because of that, there's just a lot of people in the industry in general. So, if you're serious about the business, if you have resources, you're smart about investing, you're going to survive, and it's that simple, and you're going to prosper and be in a good spot. And if you're serious about it, even if you don't have resources right now, now's the time. Mike Schock talked about this yesterday, and I wholeheartedly agree. Now's the time to get your resources, get your funding in order, get your partners in order, get your contractors in order, get everything in order. So when that opportunity comes up, you can jump on it quickly and take advantage of the situation.
Absolutely. 100%. What's the look like tomorrow? What we got?
We're off tomorrow, Ian.
We're off? Oh, finally.
Tomorrow's Wednesday. We're off tomorrow. What do we got Thursday?
Thursday, I believe we got Steve Kavanaugh of Southern Maryland Home Buyers and his partner Alex Pardo from Flip Factor, who have a mastermind called Ascend.
What time is that? 12:30?
11:30. 12:30 to 1. It'll be real good. They'll give us a lot of good mindset tips and tricks. It'll be interesting to hear how those, I guess, business mastermind groups are coping with what's going on now, and how it relates back to real estate. So Thursday, I think at 12:30, Alex and Steve, if nothing more, I'm sure they'll drop some bombs. It's worth taking a look.
Exactly. And Friday, where we can't share with you yet, you'll know soon, because we have a few guests that potentially are going to come on, but we want to somewhat save the space for Jason Schwartzberg again, just in case he wants to hop on related to this PPP stuff. And if there's any updates, so we'll probably release who's talking on Friday tomorrow. So we'll let you know then. I don't think we're going to do a show tomorrow. Ian and I might just do
unless
quick
something crazy happens overnight.
Unless something crazy happens overnight, reach out to me directly, Jason@HardmoneyBankers.com, Ian at equitywarehouse.com. If you have any questions related to anything we've been chatting about, or if you want to get in touch with any of the speakers, or if you believe that you could potentially provide a lot of value and be a speaker. Obviously, there's no gurus, there's no selling, nothing like that. Just real knowledge. And also, next Wednesday we have our meetup group, and we're going to figure out exactly who's going to hop on for that. But we have our meetup group that we'll do, and it's going to be similar setup, but it might be a little bit more presentation style. So we'll share that info with you as well. Cool, man. Well, we've been going about an hour, a little bit longer than we normally do, but listen, if there's good content to talk about, happy to share with everybody, because that's what we do.
Yep. Thanks, guys.
Thanks, guys. We'll chat soon.